Okay, welcome back to the channel. So I found this new stock today. Not new, but it's new to me. Metals Australia Ltd. Apparently they're consolidating shares, so that's why if you look them up, MLS on the ASX, probably the graph won't be there, or depends what time you look at the video, will be back. I think they're around 10 to 20 million market cap with about 2 million in cash. So why would you buy them? Because they've got these Quebec lithium projects. I haven't looked at those. They've got this one, which is also, they're drilling this one now for lithium. They had really good rock samples and they're drilling it, so that's probably an average thing, but it could grow massive, who knows. And they got this Lake Rainy Norwood Graphite project, which is pretty good too. So why would you invest in them? So what can I say about them? So they got the lithium, so we'll go through quickly this announcement here. So they had pretty good sample, that's pretty good sample, 3% rock sample there. They're drilling it out. This where it is. So there is a processing plant here for hydroxide. Not sure if they sell to them or what they do. So that's probably not the reason I buy this stock. But yeah, that could go big. Who knows? They might find some crazy amount of lithium in the one spot, making it a good project. But otherwise, it's just average. So yeah, that's the lithium side of it, and the other side is the graphite side. So where do they sit among their peers in the graphite? So graphite's like lithium. We didn't need so much lithium before until the batteries came around. Same as graphite. We didn't need all this graphite. Now we want the batteries, so we need the graphite. So we're gonna need synthetic and natural. Both have their advantages and disadvantages. Cost, synthetic's better but costs more. Well, maybe it doesn't cost more in terms of performance, according to Novonix. So I'm not interested. I know we both need natural and synthetic. I'm not sure. Tesla probably uses a mixture of both. So Metals Australia, where does their project sit on this scale? So it's down the dumps. I think it's less than 1 cent. That's why they have to consolidate it, bring it up, put all the shares together so it's at a decent price and not a silly price. So they have a JORC resource on the graphite thing. So we'll see where they sit versus the peers. So their costs per ton is around this green line here. The bubble size I'm not sure compared to these guys, but they've got 13 million ton resource at a grading of 11%. So the annual cost per ton is about 2,000. But remember, that can come down if they find more resource. So this guy is just telling you what to look for in, the guy who wrote this article is telling you what to look for in graphite miners. So aim for 1,000 kilotons per annum. So Metals Australia, their mine is about 96, so just under that. Their percentage is about 11%, so it's just over that. Their mine life is just under that. But remember, this can grow on more drilling, the more they find. So they're over this 1500, they're at 2000, and their OPEX is low at under 500. So it's hit and misses, but with more resource growth, they can tick all the boxes, and you'll get the upside on them finding that. So here's another project. Didn't know, just shut that one down. Metals Australia. But I didn't already say they're going through some consolidation phase now, so you might not be able to see the actual price. Yeah, so in Quebec, so good thing about Quebec, hydroelectricity. The reason we're going to electric vehicles is to be green, and they've got hydroelectricity. And there's another project here which is pretty big. I think that's a $40 million stock. So they're like I'm not sure if they're 10 or 20 million, with about 2 million in cash, is Metals Australia. What else can I say? So they're pretty low cost, pretty good resource. This is 2020, so 13 million tons, 11.5% to graphite, contained graphite. So it's not really great now, but it could get there on them drilling more and finding more. Strike length long, so they can drill more and find more, and that's where you'll make some money if they're successful. Dun, 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 dun. And there was things about 20%. This was at 20% in some places they found, but that I think that's maybe just the average, 30%. So here we go. The date of this one, 3rd of February 2021, 1 year ago. We'll shut that down. So here's a massive. This company has a massive resource. I think the teaming up Tesla, $800 million stock. And then we got offtake. This is another big company. It's already grown in Australia. I don't like the companies that are already grown, especially when you look at the chart for RNU. You've missed the boat. Trust me on this one. I'm just going to say it, and I don't care if I'm wrong, but if you probably buy now, you're an idiot. You probably wanted to buy down here when you thought that had a pretty good chance of going well, and not after all the hype sets in, because the share price now might stay the same. The market cap might grow because they're going to raise money to build the mine, whatever. So the market cap might grow a bit, but the share price probably won't. That's just my uneducated opinion. But if you want to go buy it here, I just say you're an idiot, even though I'm probably wrong. But look, I just don't think it's not going to happen. Okay, it's not going to happen. So you can look up natural versus synthetic. We do need both of them, and maybe someone's going to find out a way to make natural more better cycle life with natural, etc., etc. There's probably not enough synthetic to go around anyway, and Tesla I think uses a mixture of both. So main idea of this video is just check out Metals Australia, keep them on your watch list because they do look pretty decent here. So pretty good OPEX, pretty good mine life, tons per annum. Their actual IRR isn't that great. If you look at some like Talga resources on the ASX, they've got some crazy numbers with their internal rate of return and NPV, etc. But they've already grown also, and maybe they're got more upstream. Some I think this is not upstream. This which they can go upstream, and if they announce they're going upstream, then we all knew they could have gone upstream. But once they announced it, then people were like, oh, they are going upstream. Well, of course they were going to if the money was there. So this is just getting it out of the ground and selling it to someone who will further convert it. But who knows, they can go to the conversion itself and like once they convert this $8,800 becomes 5,000, and that's when you'll see a good return on the share price. So they might decide look into how to convert it themselves, and instead of selling for 800 to someone else who converts it, they sell it for $5,000 to $7,000 a ton. So once they do the downstream processing themselves, probably see good upside there. Not say they're going to do it, but there is a good chance they will. You want to buy low before this news comes out. So proximity to rail so they can ship to America, road, clean hydropower, labor and freshwater supplies. MPV, so these numbers don't look that great, but remember they find more resource, these can grow, and these numbers can also grow once they announce that they're going to go downstream, which I'm sure if it makes money it makes sense. And if you're running this company, you're going to say, well, why don't we go downstream? And guess what? The guy running this company is saying, well, we should just go downstream. So there's a big risk this might not happen. It could just sit there and do nothing. So you need to make sure you do more research and say, well, what chance does this project have of actually happening compared to all its peers? Like, if you got all these projects around the world, you say, which one should I bring into production? Well, this one is definitely the best to bring into production. And that's the questions you need to ask. Render score. So this company, Metals Australia, that was me. If you divide their capex divided by the tons per annum, you get this amount here, which is 2,000, which is higher than some of its peers. But if they find more resource and announce they're going to make more tons per annum, then that number goes down, meaning they're better. and you know this can happen, but it just hasn't happened yet. Someone hasn't drilled it out and then put it on paper for you to see, but you should look ahead to see that it's going to happen, and that's when you make money investing, going before the market does, when you have a reasonable chance of certainty. That's just my opinion. So there's risk, obviously. Um, so let's see where they sit around here. They're next door to these guys here. So their grade is about here. Their tonnage is about halfway up here. And yeah, so they'll sit around here. I'm not sure their bubble size. You'd have to look up some of these companies to see their bubble size. Dun, 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 dun. So just remember, pretty good project here. Keep an eye out for expansion on this. We'll go to the quarterly report, ASX announcements. I'm just going to read through it and you can stay along if you wish. Quarterly report, here we go. So high rock grade samples here. Dun, 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 dun. So it's the lithium. They might have something there. Doesn't look too great compared to everyone else, but who knows? Could surprise us all. This one, the downstream. So looking to go in downstream. They got some other projects here, which I'm not looking at, but that's just more upside. So lithium, pretty good samples, decent there. Coming down to this Lacrani. So look at this, up to 22%. So their grey was 11%, 22%. So maybe the 11% is the average, but they have found quite high ones here of 20%, meaning extra money. So they're looking how to make more money out of the project, as you do if you run a company like this. So pretty good stock. I'm going to keep my eye on, and maybe they find more. So if these guys got graphite here, they've got graphite here. Who knows? There could be graphite, more graphite around here somewhere. Trends. So thanks for watching. Just take this company into consideration. Also, lottery ticket company is this company here, which they're at the bottom of the bottom now, or not actually, not compared to here, but they're pretty low for the year. They're just about to bring out drilling on rare earths, so they find some rare earths with the drilling. So they've drilled it. The things are in the lab, and they're going to come back to see how much rare earths they had. They've also done a VTME to see if they had nickel, copper, and PGEs, which are palladium and platinum. So they could return something good there once. Well, they haven't drilled it. They've done the VTEM over this land, and if they hit, I mean, they're gonna like target this thing once they drill it, and there could be upside there. So small company. And I'm just feeling a bit lazy today, so just keep in mind this one. What are they? Metals Australia, lithium and graphite, both in the booming battery space. Both pretty decent things that could grow bigger, and you want to get at the bottom before the good news comes out. So I'll leave it at that, and thanks for watching.